Today, we're going to be talking about One Big Beautiful Bill Act and doing our best to share with you what are the biggest impacts of this act to the HR world. So, for your employees as well as an employer, we're going to be sharing a lot of information. We're going to be together here for about an hour. And as we're going through this, please do ask your questions in the Q&A box, right? And we will be answering those. We have a couple of folks with us, with Janet and I. There's Julie and Hannah, and we are going to be answering your questions kind of behind the scenes. Some of those answers may be, this requires more research, just being totally honest here, because this is all new. This bill's only been around for a month, less than a month, and things are changing all the time. And so we are learning what the law says, but then there also is the intent. And what did they intend to happen when they wrote that law, when they put in certain aspects of it? What was the result that they were looking for? And that's something that we're still learning and is still evolving and will evolve for quite some time. So please do put your questions in there. At the end of the presentation, time permitting, we will go over them verbally. Otherwise, we will send out everyone that is attending a spreadsheet of the questions and the answers. So if today you get an answer that says more research is necessary, we're going to do that research and then provide that answer before the spreadsheet is sent out to everyone. As we had said, we are recording today, and the recording will be provided to you along with a variety of resources. My name is Donna. I am the HR Service Team Manager here at Obsidian HR. And I have with me my colleague, Janet. Janet, would you like to introduce yourself?
Hi again, everyone. My name is Janet. I'm a HR consultant here at Obsidian HR.
All right. And so let's just jump right in. Here's our agenda. Lots of things to talk about. You know, as I've said, many of the things are really still coming into focus, but we're going to do our best to share with you what we do know today. We are Obsidian HR. Obsidian HR is a Colorado-based PEO, professional employer organization, and we're going to be looking at the federal impact of the law. Two levels, right? There's the federal, of course, and then there's the impact on the state. We'll talk about Colorado and what we know to be true here in Colorado. If you live in a different state or if you have employees in a different state, you will want to confirm those state laws before you move forward in some aspects, okay? We're going to be very much following federal, though, and that is all of us. Let's see now. Here we are, the Big Beautiful Bill Act. This was signed on July 4th, something that President Trump had worked on for quite some time, as I think we're all aware. Was signed, though, on July 4th, and it's a huge, 870 pages. This slide, if you look at the yellow items, those are the ones we're really going to be focusing on today. Lots of things that we're not going to talk about because they're not impacting HR to the same degree, and that is our focus today. Our goal is to help you understand the basics, and these items here are what we are considering to be those basics. That the changes that impact about how employers manage their payroll, the benefits that are available, HR compliance. You know, we're talking about potentially more net pay, right? Money in people's pockets, and that's an important thing. Some of the tax breaks are really going to be done on when they're filing their taxes, but others will be things that will impact that take-home pay. Increase in ICE funding means that we can expect more ICE audits, more I-9 audits coming around, more agents coming to see and make sure that your staff are indeed authorized to work in the U.S. Medicare changes means that we'll have more verifications coming in and what people wanting to know about your employees and how many hours they're working and such. So these are the basics that we'll be talking about, but we're going to dig into each of them on an individual level. And I'm going to pass this to Janet to do so.
All right. So as Donna had indicated, we're going to be touching on overtime and tips deductions, Medicaid changes, benefit expansions, and ICE enforcements and audits. And, these are the ones that I think are the most convoluted for interpretation as well as for our clients and prospects here. So let's go on ahead and move over to the overtime and talk about overtime. All right. So let's talk about this one. And this one is a lot of information packed in one slide. So it applies to tax years 2025 through 2028. That means January 1, 2025 through December 31st, 2028. So it will be a retroactive initiative. So the elements are complex, right? And for the legislation, it's not done. There's going to be a lot more legislation around this because it's not as straightforward as everyone originally thought it would be. The U.S. Department of Treasury is yet to provide employers obligations for reporting information to support the deductions and how individual taxpayers will be actually able to claim those deductions. The deductions only apply to the federal income tax and do not, and not deductions, and have caps on the amount of deductions that have income thresholds. Again, retroactive back to January 1. We're already at the end of July, so this is going to be fun, right? Not all of the amounts, keep in mind, that we consider overtime fall in that definition of overtime as defined by the Fair Labor Standards Act. It is likely the overtime pay to employees it's likely that overtime pay to the employees that they expect to be able to deduct all that overtime. So generally overtime is paid at time and a half. The employee's rate of pay for any hours worked over 40 is at time and a half, their regular rate of pay. So for example, under this regulation, they're talking about the premium for overtime. What that means is if an employee is paid $20 per hour for regular hours worked, and then 30 is their overtime rate of pay, only the $10 difference per hour is going to be deductible under the Act. Now, keep in mind, this Act has lots of interpretations, and it actually reads in excess of the amount the regular wages. So the interpretation by most individuals reading through this regulation is it will only apply to that premium amount. It will not apply to the regular rate. So the overtime premium portion may be new information for most employees and not completely understood by all of our employees. And we will need to provide them assistance in understanding how that will actually affect them. And again, I can't stress enough, this only applies, to the federal overtime. Okay.
So, and just to clarify on that, the federal overtime is over 40 hours per week. So, here in Colorado, they say if you work over 12 hours in a day, you get overtime. Well, that kind of overtime is not going to count unless it adds up to more than 40 hours in the work week. And then just those hours over 40 in a work week are what this is going to apply to.
So keep in mind, states have their own overtime laws as well. So for example, in Colorado, it's overtime after 12 hours per day. So that overtime, unless it pushes them into over 40 hours per week, would not count as a deduction in this regulation. However, overtime after 40, again, under the FSLA is qualified overtime. So again, think about that. States have various different overtime requirements that do not fall under the FSLA guidelines. The tax break is for the premium only pay again. So We talked about that a little bit, but it's not the full overtime payment. This is an important distinction for us to understand. So OHR will separate out the halftime pay and it will be reported on the W-2 separately. And we are committed to ensuring this happens. Again, it's not going to apply to non-exempt employees. It's only that FSLA mandated overtime, and the taxes per paycheck will remain the same, and the tax deduction will be taken on an individual basis when filing their 2025 taxes in 2026. So again, just kind of noting here, Colorado Colorado state tax will not be complying with this. Many states will be applying the federal overtime um, under OBBBA as well. However, Colorado will not be. So that means any Colorado based overtime will not be counted as a deduction under this requirement. All right. Again, the tax break will end in 2028, just in time for all of us to get our payroll systems changed over to the new way of doing things and possibly have to change them back if no additional legislation happens after 2028. All right, let's go on to talk about the tips. So, according to the FLSA, a tipped employee is one that regularly and customarily receives $30 or more per month in tips. Like overtime, the new deduction for tips only the definition of qualified drops can be deducted by employees. Let me try and reread that over again. So like the overtime, the new deduction for tips is only for the qualified drops that can be deducted by the employees. These include cash tips, credit card tips, tip sharing, even Venmo or electronic payment system tips that should be reported. Tips must be received on a voluntary basis, so mandatory service charges, such as the mandatory tips on parties greater than a certain amount, or even service charges will not be included in this amount. And the IRS will be issuing a list of qualifying positions for this tip deduction, supposedly by October 22nd, 2025. Tips must be reported during the pay period in which they were earned. And only reported tips, these will be separated out on the W-2, are eligible for that tax deduction. So what we can expect. We can expect employees will report tips received to a higher degree. It is standard for tipped employees to only report a portion of their tips. Also, higher tips reported can result in higher employer taxes. More gross wages equals higher FICA taxes. Potentially, also change in the process to reporting tips, and then lower net pay on an employee paycheck based being taxed on more tips means less take-home pay. Donna, am I saying that correctly?
Yeah, I mean, when if you are in the restaurant or in a basically a tipped industry, you probably have noticed that sometimes, especially when an employee is paying for healthcare benefits, their take-home pay is very small because they are reporting the tips, and those tips that they may have already have in hand, those they have to pay taxes on them. And so those taxes cut into that take-home pay. Uh, Tipped employees sometimes are paid less than the regular minimum wage, which of course is legal, that tip credit, right, for employers. But again, that means that their net take-home pay could be reduced because, like Jenna said, we might have people reporting more tips because they want to be able to take this tax break. We don't really know what's going to happen, and we won't know until at least one full year has happened and people have gone through tax programs. But if they are reporting higher amounts, we do know that those tips reported are taxed. And that includes Social Security and Medicare, which is matched by the employer, and that could increase. Yeah. I hope that makes all made sense.
Good point. Yes. And this deduction only applies to the federal tax and not to FICA or any of the other types of taxes, including state taxes that may come out according to whatever state you live in. So again, for states that do not conform to the Internal Revenue Code, overtime and tips will not be deductible under state law. And Colorado is a good example. They will maintain the state overtime tax rule with no deduction for state taxes. Colorado will recognize, however, the $25,000 maximum in tips that can be tax-free when filed correctly on an individual tax return. This deduction, again, is taken when filing the 2025 tax return. Tip deductions are also retroactive back to January 1. So it's going to be a fun year for everybody, getting that information separated out if it isn't already. And again, both qualified tips and qualified overtime must be reported separately, and the IRS is to issue that guidance on where and how to report on the tax forms. So that's still a little bit up in the air, is how is this going to be reported by the employer, and how is it going to be reported on a W-4? So again, communicate these deductions to your employees so that they completely understand, especially on the overtime premium, and it's not going to be the full amount of that overtime, but rather just that premium pay, that amount on top of their regular rate of pay.
And just to mention too on that with that premium pay, Janet mentioned that there's a lot of interpretation on that, whether it's the full time and a half or only that half time, that premium. And that's one area that we can really expect to get more guidance, and especially in the intent. What did Congress intend when they said they would provide this tax break, right? All right, moving on to Medicaid.
Medicaid. Oh, okay. So a lot of us aren't going to think that these Medicaid changes are going to really affect us on the employer level. However, there are going to be some effects to us. So, first of all, there's going to be research verification timelines. That's still a little bit up in the air. It also codifies more rigid work requirements for Medicaid eligibility. And this is the one that we hear about probably more often. Individuals will be required to engaged in qualifying activities for at least 80 hours per month. So besides working, this could be other activities an employee may engage in, which include job training or community service or attending school, as long as a combination of those hours equals 80 hours per month. That's going to average out to about 18 and a half hours per week. Now, keep in mind, you may have employees coming to you and saying, I need to pick up a few more hours in order to stay qualified for Medicaid, right? Keep in mind the employer is the one that sets the schedule, and you should schedule staff based on the needs of your company and not necessarily the needs of the employee. So again, there are other options when employees come to you and are looking to increase their number of work hours that may not fit into your complete business needs at this point. So, which include the volunteerism, other community activities, as well as job training. There are exceptions to this rule, and on the right side, we have those exceptions listed. The groups that are exempt from working 80 hours per month will include individuals under the age of 19, pregnant women, those that are medically frail, and caring for a dependent. More information to come regarding those as the intent behind those definitions becomes more clear. So again, what can you expect as an employer? Again, part-time workers may be coming to you to request more hours, more consistent schedule. You may have new folks joining the workforce on a part-time basis. Some of these may have very minimal skills and will likely be looking for entry-level positions. And there's going to be a heavier administrative burden to confirm hours worked. This is still also being determined in Congress. Some articles are saying that the law requires a state to validate the hours worked regularly or on a monthly basis. Others say the Medicaid agencies will be required to verify eligibility every 6 months, but it's not just going to be the state or the Medicaid agencies involved in that verification. They're going to need that information from you as the employer on hours worked. So be prepared for more of those verifications coming through and needing to be completed. And then our next article is going to be
And
on, oh, go ahead,
I'm
Donna.
sorry, Janet. I'm sorry. I just wanted to add something to that. I wanted to remind all of you that when it comes to the schedule, when people are coming up to you and saying, "Hey, I need more hours in order to qualify for my Medicaid," the employer sets the schedule based on company needs. So you're not required to provide them with more hours, but if you have more hours, that's certainly a benefit that you can provide. So just that quick reminder that the employer sets that schedule based on business needs, and it is up to you whether or not you're able to provide those hours.
All right, let's talk about some additional benefit expansions. This is going to include FSA annual cap increased from 5,000 to 7,500 or 3,750 for individuals married that are filing separately. And again, this is an option to provide employees some additional benefits or better benefits, adding new options to your current offerings. Student loan repayments are another codified, permanent, made codified requirement. So employers can contribute on an annual basis 5,250 tax-free towards employees' student loan repayments. And then we also have our child savings accounts. I believe they are currently being referred to as the Trump accounts. These are new tax advantage savings accounts. Contributions are allowed from parents, they're allowed from relatives, employers, nonprofits, and governments. Contributions can be made to these accounts up until the child turns age 18, and withdrawals are allowed starting the year the beneficiary turns 18. So these child savings accounts also include a temporary pilot program. I believe they're referring to it now as the newborn pilot program, in which the federal government will contribute $1,000 per child born between January 31st, 2024 and December 31st, 2028. So again, another opportunity for employers to provide a benefit to their employees or use it as a retention benefit, use it as a recruitment benefit, just another benefit that we can take advantage of, and the employees are allowed to take advantage of the tax-free status. Excuse me, I should say tax-deferred status. A lot of details on this benefit, as many of the other ones still remain a little bit unclear. However, do expect to hear more about these benefits and be prepared. Benefit departments will also be working to revamp their offerings as well as their open enrollment communication. ICE enforcement. I could have filled this slide up with everything that's going on. So a lot to talk about with the ICE enforcement. So, this bill tripled funding for immigration and customs enforcement, over $140 billion over the next 4 years, including more border infrastructure, detention facilities, agent operations, etc. This will take place over the next 4 years. Outside the ICE raids, some other impacts that may affect employers will include significant increased fees for asylum seekers, temporary protected status applications, new fees for student visas, and specialty occupation visas. It also is going to place limitations on funding for immigration court operations, what that means or what is that's being interpreted to mean is that things are going to slow down in that process. Things are not going to get through the system as quickly as maybe they used to get through the system, especially as we work with individuals obtaining green cards or student visas. Also, the Department of Justice, while has always had this authority and the ability, will now prioritize denaturalization cases for individuals deemed a danger to national security. And then the last part of this bill eliminates Medicare eligibility for people with lawful immigration status who have already paid into the program. That's a lot. So we can expect from that possibly more people coming onto a company benefit program. So how can we help? We're going to partner with you to develop responses, work with I-9 audits, help you conduct I-9 audits when needed, prepare for unannounced visits, documentation requests, because there's probably going to be a lot more of that coming to our employers. And then really making sure that our high risk industries, including hospitality, construction, manufacturing, and retail, are prioritized. We want to also proactively review expiring documents, and that's going to be part of the e-verification process. So previously in the past, e-verify would proactively provide alerts to employers when documents are expiring. This is not going to happen anymore. They expect employers to be proactive and, as they say, regularly go in and run a report to ensure no documents have expired. Now, keep in mind, not all documents need to be re-verified when they expire, such as passports or driver's license or state ID cards, right? These would only be for your employee authorization documents. And again, we can help you with that and assist in determining what shape your I-9s are in and how we can help further with anything that you need in that area.
And just to clarify, that is a client service that we would provide. If you are not currently a client with Obsidian, we can provide you with the tools that you might need in order to do these things on your own. But we would not specifically assist if you're not a client. Thanks.
Okay, so while not really directly affecting the employment realm of this bill, there are fossil fuel incentives included in this, including fossil fuel incentives, however, taking away any clean energy tax credits that were previously in place. And Donna, I think I'm going to pass it on to you for the next slide.
All right. Thank you so much, Janet. So I think you'll find as we're going through this, a lot of what we're talking about today, we're going to be pretty repetitive because it's a lot. And so we want to try and help clarify things as we are going through these different areas. And we want to talk about which industries and which employee groups are being the most impacted by this new law. So when we look at these industries, and if you're part of any of these industries, you may want to go ahead and start taking steps to prepare for these upcoming changes. So, we talk here about tracking tips separately and, preparing for any I-9 audits and having things ready for your W-2s where the overtime and the tips are going to be reported separately. Now, the IRS is still working on that, and how's that going to happen? And, what exactly does that mean? But there's also going to be a very important part of this in which, as employers, we are helping the employees to understand. So educating them on the new W-2 form when it does come out, and helping them to understand why it's important that they do report their tips so that they can take that tax break. Now, so that's the restaurants, hospitality area. The salons, similarly, they certainly do receive tips, right? So that I'm sorry, I just totally got distracted there for a moment. Excuse me for that. So the salons in the retail and warehouse industries, you know, each of these has its own specific things that we have identified, and there certainly could be more that are steps that you can take in order to help you prepare for these upcoming changes. Um, and let me see. So this is the industries that are being impacted. And then we have these employee groups. So tipped employees, hourly employees that are working overtime. And again, that overtime has to be FLSA mandated over 40 hours per the work week. Uh, Part-time employees, with those changes to Medicaid, we can see part-time employees, maybe they want a little bit more hours. Um, it might be somebody that works like 30 hours a week that says, heck, I only need to work 20. I'm going to reduce my hours, but we can expect that to happen. And working parents, of course, some of those, the flex spending, the Trump accounts, those are really going to be important for working parents. And this will come up definitely during your open enrollment, as Janet had suggested. The implications that we're looking at overall with this new bill, to go over these implications, I'm going to send this back to Janet. You're on mute.
I'm sorry, I was looking at the notes there that were coming in, the questions that were coming in, some really great questions. All right, implications. Yeah, lots of implications coming, including miscommunication of information to our employees or misunderstanding information that our employees bring to us, outdated information. There's going to be cost implications. There's going to be compliance implications, lots of missed opportunities, especially when it comes to benefits or any tax credits, right? So incorrect W-2s, there likely are going to be many corrected W-2s filed this year, at the end of this year, I guess I should say. And there are fees involved for those incorrect W-2s having to be refiled. Incomplete I-9 paperwork. Of course, the bill increases enforcement, so we can kind of see these fees being applied more often. And then, of course, outdated benefit plans. We miss out on recruitment and retention opportunities when we don't have those benefit plans updated with the new information. And then there's that compliance burden. You spend a lot more time and a lot more money fixing issues after the fact. So there are going to be some pretty big implications for not knowing this information as we go through this year. And then as we go into what you need to know, okay, updated payroll systems for the new W-2 requirements. This is a big deal. I don't know how many of you guys have been involved in payroll system changes, but this is a big deal. So again, you're going to have to track tips and FSLA mandated overtime premiums separately for each employee. That must appear on an updated W-2 form expected from the IRS yet this year. And without accurately tracking, your employees are going to lose out in thousands of dollars in deductions, right? Okay, so start tracking those tip income accurately. Ensure your overtime is classified correctly. Work with your payroll provider, making sure that your systems are set up correctly to track this overtime correctly. Stay tuned for those W-2 redesigns that we'll likely see here in the next few months. And added boxes for the qualified tip income and qualified overtime. And again, we're certainly monitoring that for our current clients and making sure that they'll stay in compliance for the payroll system this year. All right, Donna, back to you for recommended actions.
Very good. So what are the things that we recommend that you do in order to get things in order? And first of all is your I-9, I-9s, I-9 house, I-9 audits. I just read an article the other day, and this is Colorado specific, but they did say that there was two organizations that were fined more than $8 million for having undocumented workers. So these I-9s can be incredibly important. Janet shared a little bit about those potential fines and penalties. What I find to be the most scary when you're thinking about I-9s is that there can result in jail time for hiring and allowing unauthorized workers to be employed. So
I want to add
having,
something there
yes,
on that
please.
as well. Keep in mind when an individual's document expires, if they have not obtained a new document, they are undocumented at that point in time. It is the employer's responsibility to make sure that EADs are updated and correct at all times. So again, one more thing just to keep your eyes out on, pull those I-9s and make sure they're accurate.
And once you've done that first audit, just to like reconfirm, there's many ways you can do an audit. Some people are still using separate I-9 books with their information, which is great. You can look through there very quickly. If you're using more of an electronic system, it may be a little bit more time consuming, but the USCIS, United States Citizen and Immigration Services, has provided, and we will share this with you, some really great guidelines on how to conduct an audit and the things to do if your I-9 is not in order. So let's say that the employee forgot to sign it when they were hired, or they didn't add a date when they signed it. Well, there's ways to correct that, and that book will go through those and share with you exactly what needs to be done. But going through each active employee, I start with the active, making sure those I-9s are in order. And then, of course, those record keeping rules come into place. And it is okay, I'm in 3 years from the date of hire or 2 years from their termination is the guideline. Is Janet, I'm checking myself.
I believe it's 1 year from termination, but we
Okay,
can
thank
double
you.
check on that and provide that information.
Thank you. When I said two, I thought, oh, I think it's only one. So, but the total of 3 years. So if it hasn't been 3 years in all, you have to keep that longer. Okay. So the idea behind this is if there's an audit, you may have to not only provide I-9s for your currently active employees, but perhaps some that have left more recently. And so start with your active, then go in and check those folks that left within the last year. Make sure that you are in good shape. You can make changes, you can make adjustments, you can put notes to file in order to bring them up to compliance. When or if those ICE agents come and ask for those documents, you will be prepared. Being prepared brings you so much empowerment. I can't emphasize that enough. These I-9 audits are very scary, becoming scarier by the day. There's a lot of stories out there and things that are happening that really do give us pause. And so, how do we prepare? And one of the best things you can do as well is to really prepare your staff as well to make sure they know that if immigration comes and wants to view the I-9s or wants to talk to you, what are the steps that you want to happen? Who should they be talking to, and what will that look like? What's the plan? Having a really good playbook in case of an immigration audit or a raid.
Gonna add
Again,
one, oh, I'm sorry. I was just going to add one more thing to this. Before you start making any corrections or anything on anybody's I-9, please make sure you read through the I-9 book that we're going to be providing you after this webinar. There are certain ways that corrections have to be made, and they're not always going to be the same depending on the type of error that took place on the I-9. So before you just start making changes on an I-9 form, make sure you review what you're required to do.
thank you, Janet. Great reminder. Because I tell you, these guys are really sticklers about this stuff, got to have it in order. The next thing is just partnering with us, partnering with Obsidian on compliance overall. We already talked about the fact that this new law and this one big beautiful bill act is long and complicated. There's a lot of things in here that are going to impact your businesses over time, and a lot of IRS regulations. The Department of Homeland Security is involved, Department of Health and Human Services, the Treasury is involved. There's so many different organizations that we're still looking to get guidance from, right? So we know that we need to update payroll processes so that things can be separated out. We know for sure that there's going to be new W-2 forms coming out. These are the things that are going to be absolutely necessary in order to be successful with this new law. We will, I was thinking about this earlier and I thought, gosh, it probably would be an awesome idea for us to come back at the end of the year and talk again with this same topic, just to see what more clear guidelines are we able to provide, because we will be monitoring the IRS, the Department of Labor, all of those departments that I just talked about. We're going to be monitoring what changes are necessary. How are the new Trump accounts, how is that actually working? All of those things that we can help you with, we want to help you with. And so certainly, if you're not current client, please, consider talking to us and seeing what we can do to assist you. Now we're going to switch gears at this point, and we're moving to Colorado legislative updates. There was just a few from this last legislative session in 2025, and just wanted to add these. So I think we only have 1 or 2 slides here. And so one of the big changes was in regards to the family program, which is family and medical leave insurance. This is our state-run paid medical leave program, right? So these changes are going to be happening as of January 1st, 2026. And they're going to reduce rates. It's only by a small amount. The current amount is 0.9% of gross wages. That's going to go down to 0.88%. Small change. Now that amount, that 0.88, can be split between the employer and the employees, or it can be paid entirely by the employer. However, the employees cannot be made to pay more than 0.44, half of the amount. Also, a quick reminder that many of you may have private plans, and if you do, then you would work with that insurance company that is involved in it to determine what are those new rates. This would be the folks that are under the state program. Okay. They have added oh my gosh, neonatal, am I saying that correctly? Neonatal intensive care for preborn, for infants that are prematurely born. It will cover 12 weeks plus 12 more weeks for bonding. So someone that has a premature child that qualifies going into the NICU unit, then that will mean they can have up to 24 paid weeks under the family program. So that payment does come from the state, right? It's not out of the employer's pocket, but 12 weeks out of work versus 24 weeks can be a big difference. It's a really awesome change for the parents of those premature babies, but it can turn into a burden to employers. So just want to make sure that you're aware of that change and that possibility, right? Also, the weekly benefit amount did increase since families started in January 1st, 2024 was when the employee benefit started at $1,100 as the maximum per week. It is currently up to $1,324 per week. And that is based on the average wages in Colorado. So yeah, that went up quite a bit to about $225 in about a year and a half. So we will expect that to continue increasing. As a reminder, benefits are up to 90% of that employee's regular wages, and it is on a scale, so it maximum of that $1,324. On the right-hand side of the screen, it talks about the ban on the non-competes and non-solicits for the healthcare providers. So this is effective August 6th, so coming up very quickly, just in a couple of weeks. Talks about who that applies to. So physicians, physician's assistants, advanced practice registered nurses, certified midwives, and dentists. And you cannot require a non-compete agreement. And it really restricts that post-employment patient contact. So you can't tell them they can't contact their patients that they worked with previously or tell them that you have started a new practice. This is kind of a big change and certainly can impact that healthcare industry. So just sharing that information. Again, if you are a client of Obsidian, we will contact you. Those are clients in the healthcare industry to discuss this further and to ensure that you are remaining in compliance. A couple of changes in regards to transgender protections. These go back to May 16th when the bill was signed by the governor, and it prohibits what they call dead naming. Dead naming is using an individual's former name, and it prohibits misgendering, which is using those incorrect pronouns when referring to an individual. So those are the Colorado updates. And we would love to, if anyone has any additional questions. It looks like we are going to end just a few minutes early. But here's what Obsidian HR does. Consider contacting us, consider using us for your HR needs. We would love to have you join our team.
We do have lots of questions and coming in our Q&A. Keep those coming in, or if you would like, are we open for taking questions? Can they unmute themselves? I guess I should have asked that before we started the webinar presentation. But keep those questions coming in. If we're not able to answer those questions for you between all of us here on the webinar with OHR, we'll certainly get back to you all with them. And the benefit of asking the question, everyone, is everyone learns the answer. So you're not the only one that probably has that question. So make sure you ask.
Yes, absolutely. We will also send out that spreadsheet of the questions with our answers for the ones that were already answered. We could also go over these verbally. Janet, would you like to do that with me?
Yes.
All right. All right. So, the first question is, has the webinar started?
Yeah. Let's go ahead and skip past those and get to some of the meat of them.
All right, let's see. We did have some technical issues in the beginning, and again, very sorry about that.
Okay, so I think there's one from Stephanie, Donna, that will be in your wheelhouse. Does the tip rule mean that employees need copies of receipts? Since this is since the mandatory tips don't count, that is correct. It's only voluntary tips. Or am I understanding that incorrectly?
So only the tips that are on the W-2 are the ones that can use that tax break. So they won't necessarily need copies of those receipts because it's things that must be reported to the employer. It has to be on that W-2. So it's considered wages and will have been taxed accordingly. Does that help? Do you think that answers it?
So if it is a voluntary tip, they will not need a receipt because voluntary tips, again, are the only ones that will count towards this tip. I think I'm calling it a tip credit, and I should call it a tip deduction.
Yeah.
And again, those mandatory tips will not count according to this bill.
Yeah, and so like the mandatory tips, oftentimes those are referred to as service charges. So the government has always viewed service charges just differently. They say that those actually belong to the employer and that the employer then redistributes them. So it's not given directly to the server or the individual, and it's not viewed as a voluntary tip. Have to report them, has to be on the W-2, it has to be on the paycheck at some point in order to be on the W-2 in order to be eligible.
All right, we have another one from Lauren. What able variable work week pay? What about variable work week pay? And I think with the variable work week pay, I think we're going to have to get back with you on that one just to kind of understand a little bit more. If you want to ask a little bit more detailed question in the Q&A right now, you feel free to clarify that a little bit more. Otherwise, we'll do our best to answer it in what we send out to you all. And then we have a question regarding from Crystal. So are disabled required to work 80 hours or are they an exception? And so possibly both. I guess is probably going to be the answer that I can give you because right now they have distinguished that frail as their definition, right? And so that interpretation has yet really to be determined, and I suspect we're going to be hearing a little bit more about what injuries, illnesses, etc., are going to qualify under the disabled exceptions. Verify how, other than workforce, how someone can get hours to qualify. Yeah, absolutely. So you have job training, you have volunteer hours, community service. Those are going to be good ones, or even school, somebody who's attending school. As long as a combination of those hours between work and those events, those qualifying activities equal 80 hours a month, that will work as far as the bill is concerned.
Yeah.
We anticipate more things coming at us in the next few months on that one. And we'll probably have time for one more here. Donna, if you want to take this one, does the overtime pay apply to those who are paid on a variable work week? Lauren, I think that's tied to your previous question. Yeah. So we're going to hold that one. And then Stephanie on the student loan repayment. Employers are allowed to benefit to help employees with student loans. That's a question mark. And they want more information about that as well. Donna, are you able to just touch base on this one real quick, or should we put it in?
I can, sure. No, I can. So there was a opportunity for employers to assist with student loan repayment. And that was actually sunsetting here at the end of this year. This act has extended that opportunity. And so the employer is allowed to put, and I'm sorry, I can't remember the exact amount, but they can put that a certain tax-free amount towards an employee's student loans. Now, here at Obsidian, this is a benefit that we're provided with for people that have their own student loans. It's an absolutely awesome retention tool. And we can provide more information, directly related to this. And if you can please jot that down for our resources. But the idea behind it and what we do at Obsidian is that we do require that the employee also makes a payment each and every month, so that then the company will pay, say, $100 a month towards your repayment, and that student loan is paid off much quicker.
Yeah, and these can be set up in different arrangements, as I understand. Yep. And that amount is $5,250 per year, for everyone to know. And okay, I know we're over time. We're gonna take one more questions because I really love a lot of these questions coming in. Clarifying the Medicare, employees in Medicare is eliminated in regards to immigrants. I would like to put that in the Q&A document that we're going to send out to you, because it's a pretty deep explanation on that one. And Donna, I believe I'm going to give this one to you from Lonnie. I believe you said for I-9 tools that you would send those to us, even if we aren't with Obsidian. I can answer that one. Yes. You're going to get yes. You're going to get a copy of this recording. You're going to get the deck, and then you're also going to get that resource as well.
Yeah. Okay. And then I did see another one here that was interesting. Can you explain a little more about Trump accounts? The $1,000 goes towards what for the child, and how does one receive that? So there's a number of Trump accounts that are really bundled into that same terminology. The $1,000 is a pilot program that they're starting, and it is for children that were born between basically January 1st, 2025 to December 31st of 2028. So the child has to be born during that time. How it will be set up and how you get this money is very unclear. They didn't provide clarification, but the government will be providing $1,000 to these individuals, these young children, and that will be something that you can build upon, right? So for savings, for education, for homes, and then with all of those accounts, the money cannot be accessed until that youth is over the age of 18.
Yes. Yes. And because they're going to be tax deferred accounts like your FSA and HSAs, kind of anticipate these being provided by a benefit broker or a benefit provider. So, but more information to come on that one because that really hasn't been established. And I know we are 5 minutes over, everyone. I'm just going to say for myself, I really appreciate all of your time and definitely all of your questions. And again, the patience for us at the beginning of the presentation. Donna, is there anything else you would like to add?
No, just thank you so much for joining us today and for your patience while we had our technical difficulties and for all of your awesome questions. We will get information out to all of you within the next 1 or 2 days and let us know of any questions once you get that information. Thank you so much. Have a great
Thanks,
day.
everyone. Bye.
Bye.